Okay, good morning everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, July 21st. Michael Boutros here with you guys. Good morning. We are getting the release, or we did just get the release of the ECB. No change to interest rates as expected. Interestingly enough, no new announcements with regards to measures for further easing, whether it's the capital key, whether it's extending the date or the amount of the purchases. So we are having Draghi taking the stage right now. We'll keep you updated on any comments that cross the wires throughout the course of the webinar here as he continues his press conference. Usually this is where we get some of the meat off the bones with regards to monetary policy outlook from the ECB. But looking at some of the updates that we covered yesterday, we'll be covering Euro Dollar, Euro Aussie, Euro Yen. Looks still constructive above 115. And change, Aussie dollar, Kiwi Yen, and then we'll jump into some of the sterling crosses, sterling CAD, sterling yen of specific interest. Okay, as always, questions, trade setups you want to review, feel free to throw them on the message board. Here's what we look like ahead of the U.S. Open with regards to dollar performance. You can see that the dollar is a mixed performance so far in this session. Here's the index. Biggest gains on the yen, 0.67%. You saw dollar yen take a little tumble last night. Aussie up 0.23. Euro with a slight gain of just 1/10 of a percentage point. Biggest loser on this session, Kiwi dollar, down 0.63%. And certainly I posted a chart on that on Twitter last night. We're still holding that basics support range still in the Kiwi, so we'll take a look at that as well. All right. So as far as the ECB is concerned, we are looking for comments from Draghi with regards to the capital key, which is essentially the grid that, or the allotted assets that they can purchase, right? It kind of narrows it down to what they can and cannot purchase. Right now, they're pretty much restricted between 2-year and 31-year yields or maturities. We'll see if that is extended beyond 31 years. Keep in mind also that Greek bonds fell to junk, so that really limits their ability to buy Greek debt. So really what we're looking for is an expansion or signals that there's going to be further easing down the pipeline. Let's just jump right into the euro dollar. As it stands, as far as the dollar index, before we move off, there's really not much to talk about here. Key resistance still at the yearly open. You're seeing that trend line that we talked about yesterday, that longer term trend line, former resistance, now support, turned resistance again. You're seeing that we can't figure a close above it. Okay, near term, that is a tell. So keep that in mind. And again, there's not really much to play here necessarily on the index, but watching for near term resistance. Here's the euro dollar on the back of the ECB. The daily chart first. Okay. No change really to any of the levels. Bearish invalidation still remains with the monthly open. That's 111, essentially 111.06. And you've seen this slope line, this 50 line here, continue to offer some support, specifically on a closed basis. If you bring this into a line chart, you can see very clean holding excuse me, on a closed basis of support as momentum continues to hold 40. So I'm still not crazy about getting the bearish or getting bearish on the euro, until we break that level, until we see a downside move in momentum sub 40 on the daily chart. I'm still thinking that this thing is at risk for a rebound higher. Here's what it looks like on the 30-minute chart. And certainly on the 30-minute, you saw us come yesterday. Just bring this into the middle here, and here's what we look like last night. So yesterday we noted that we had come off an exact 100% extension. So that's 2 equal legs down off the high, right at 109.80. You saw that base there in London trade yesterday. The rebound coming into the median line for this embedded structure off the high, breaking through that in overnight trade, checking it as support, and moving higher. So starting to get a little bit of a constructive near-term outlook here. Initial resistance at the weekly open, 110.49. That 618 extension comes in at 110.51. Okay, so near-term resistance here for the euro dollar. A breakout would necessitate a move beyond this trend line, and that to me would be sort of the go-ahead for further euro gains. We'd be looking to buy pullbacks back towards the weekly open for an inevitable rally towards the monthly open. Again, that comes in at 111 111.05, 111.06. As far as the downside's concerned, not really interested in trying to fade this. I mean, again, I'm monitoring what Draghi is saying here, but remember that with the expectations where they were, no expectations for an interest rate cut, but expectations for sort of a tell that they're going to see more easing from the ECB. We'll see if he alludes to that. So far, he's saying export growth remains modest. Second quarter likely to have been weaker than the first quarter, so sort of prepping the markets here for a weaker read on second quarter GDP. Says the recovery continues at a moderate pace. Past ECB measures support domestic demand and see support still relatively still support from still relatively low oil prices. Draghi says risks to the euro area growth are tilted to the downside and inflation to pick up further in 2017 and 2018. So all these comments are sort of in line with market expectations. Still no indications here that we'll necessarily see further easing down the pipeline. ECB says we'll use all instruments in mandate if needed. New forecasts will help ECB assess underlying conditions. And I'll continue to bring these headlines. But long story short, guys, on the downside, if we do break back below the Asia low, or this is actually the London low here, you still have to contend with this key support zone. So sort of the range and focus, let's say, heading into the U.S. session would either be a breakout above that median line parallel off the high, or a break of the Asia lows, again, to look for a drop into this key zone backed by 109.40. And that's a nice confluence area here today with the median line for the embedded structure here and an 88.6 retracement. This is off of the Brexit low. So the levels are super clear here for the euro. We'll have to see how this pans out into the U.S. Open. Again, from the daily chart that we just noted, the risk remains if we do see a topside breach here for a little bit more of a meaningful recovery in the euro dollar. I just want to check one thing. If there's been any meaningful change in euro dollar SSI. Okay, so we're starting to see that narrow a little bit. Yesterday, this is the daily chart of SSI. Yesterday, if you read the piece I put on Daily FX, noted that traders went net long yesterday, the euro dollar, and obviously that's going to be a bearish read in the meantime. But you see here again a flip to net short. Okay, and that again suggests that the downside momentum may be waning. Okay. So we'll continue to monitor that development as well here for the euro. Still think you can get a pop higher here. Questions on euro dollar? Okay, and Draghi noting here that banks said that the TLTRO helped improve loan conditions. And inflation to pick up later this year. Okay, I'll continue to bring you headlines from Mario Draghi. Moving right along to the other euro crosses that we've been following for today's ECB announcement. Euro Aussie, another trade I was personally involved in yesterday. I noted that in the report. Here's what Euro Aussie looked like yesterday, and here's what we look like right now. So we talked about this in the webinar. We talked about a basic trendline support off the weekly low that's sort of been in play. You had a nice pivot in price here at 147. I actually took a long off the drop into 147. Remember, a quarter of the daily ATR here is about 40 pips, if I'm not mistaken. So again, every 40 pips, you'll look to do something, take some off the table. So inevitably, I did take off 2/3 of the trade on the way up into this key resistance zone again. And then actually before I went to bed, I kind of just took off the rest of the trade before we broke down. I guess here's what the 5-minute looked like. Euro Oz. And there was the trigger. You had a couple of different things to look at. You had momentum with a really nice secondary rebound here after breaking 60 right at 40. That was a tell in the near term as far as Euro Aussie is concerned. Here's what it looks like here's what it looked like on the 1-minute chart. And the long story short, I don't want to waste too much time because we're heading into resistance right now. But the long story short, again, 40 pips, quarter daily ATR. We took our third off, booked our stops at break even. Another 22 pips. We took another third off. Again, stops were left at break even into the overnight trade session. And then we started to see momentum teeter out at 60. And then the inevitable break sub 50 would have been a tell for a near-term pullback. And again, we got that near-term pullback. Here we are right back at resistance. Okay, right back at resistance. So remember a couple of different levels I just want to highlight heading into the U.S. session at this point. If we do mark a break through this region, you're still having to contend with that 147.97 level. And that's simply the swing low that we made here for June trade. It was actually the June low. It also coincides pretty nicely, if you take this out to the daily chart, with this level right here. This is a very simple sliding parallel for the current operative slope that we're trying to break out of, extended off the high that we made on June 6th. You can see some really nice touches. That coincides dead on with the low from June, 147.97, basically the 148 handle. Hi, Mike. Is there a way to show the current daily ATR in TradingView, says Graham. So, Graham, in TradingView, you can bring up the ATR as an oscillator. You can't bring it up the way we had it in MarketScope. So, okay, so you can bring it up like this. So it tells you right there you have 141 pips, and you take a quarter of that as your daily ATR, Graham. But the way we had it in MarketScope, which is pretty cool, is just showing up right here. This is an indicator called ATR and pips, and you can certainly get this for your MarketScope. You can find that on fxcmapps.com, and that allows you to put a multiplier. So 25% of the 20-day ATR is about 40 pips on this. All right, so you can use either or. This is just an easier way of doing it graphically. But ATR is a very basic read. We are working on the way, by the way, we are working on some new applications for SB Trade Desk, the website, that allow you to view all the ATRs, view all the average ranges, the actual ranges, as well as different volatility measures that you can use throughout the course of the day. Just some interesting projects that we're working on our end. So, Graham, I hope to have that up for you soon. But I hope that answers your question. As far as the Euro Aussie is concerned, watch that key resistance. So again, I'm not really interested in taking any new long exposure from now. If we do get through this region, I'd actually be looking for exhaustion somewhere around that 47, what is that? 47.97 region. A break there, and you're basically looking for a rally all the way up to the monthly open, the yearly open. That brings your range of 49 into 49.13, this region up here. All right. Again, long story short, my personal opinion is I do think you get a rally into that reason, a more stern pullback before you can get back on the long side for Euro Aus with conviction. Either that or a topside break here, a check of 47.97 as support, and then a move higher would be sort of the game plan moving forward. Also, can you export charts from TradingView? I'm guessing a lot of SB users recreate much that you show. Yeah, Graham, we've talked about that. I don't really want to get in the habit of doing that. You know, first of all, our goal here is to kind of teach you guys how to do this on your own. That's one thing. But B, Graham, I'm updating these charts all day long throughout the course of the day, multiple times a day. So, you know, to keep your charts updated, you would need to constantly be re-downloading my charts. So I'd rather keep it more of a, we'll push out the charts that are in view, that are in focus at the time, and we'll sort of move forward with that. But definitely an option we'll be looking at, Graham. I've gotten that question more than once. Any questions on Euro Aus before we've moved on? Near-term resistance right here at 47.44/55. Remember, by the way, just as a quick reminder, that this region of resistance here that we noted on Sunday was really based on the measured move of the triangle break. Okay, so the consolidation pattern that we were in for the better part of last week broke here this week, the measured move takes into 47.44/55. That's still the level to beat. Key resistance 47.97. Okay, before I jump into Euro Yen, which is the next update from last night, I do want to just take a quick segue and cover Aussie dollar. Since we're here on the Aussie Euro Oz as well, here's what the Aussie dollar chart looked like earlier in the week, and here's what it looks like now. Okay, we've essentially made all the breaks and taken out all the downside targets, saved the monthly open. Okay, here's what we looked like earlier in the week. We were just on the cusp of a downside break of not only the initial weekly opening range, but also a basic 50 line for the current operative slope that we've been following here in the Aussie dollar. The downside break opened up targets into 70.35. That was sort of the near-term bullish invalidation level, and a break below there would likely have seen accelerated losses like we said. We got it. The downside break immediately acted as resistance right back into 75.35. Subsequent targets at 74.90, the gap at 74.70, all being taken out just ahead of that 74.46 level. Big region of support. I can't stress it enough. This is the monthly open right here at 74.50, and then 74.46 is a key 618 retracement of the entire advance off the Brexit low. So you have a lot to look at as far as near-term support here for the Aussie at 74.50 or so, thereabouts. A topside break would need to happen above yesterday's sort of U.S. session high. That takes you basically at 75.16, 75.15. And if we do mount that, I'd be looking for a little bit more of a meaningful recovery in the Aussie as well. That's dollar weakness, right? So it kind of poises well with what we were looking at the dollar index, imagining a scenario on the dollar index daily here where you kind of spike into a new high and then come off. Aussie dollar, same type of game plan here. You could see a scenario where this thing tries to make another move towards the low and then rips higher. On the daily chart for the Aussie, I think it's pretty clear as well, just coming into basic structural support along that 50 line, and again, the monthly open right there, 74.50. So curb your downside appetite as far as the Aussie dollar is concerned right now. Question here says, on the pairs with wider ATRs, do you still wait with the approximate quarter of it, or take some off, or take off closer to 25, 30 pips or so when the move seems to reverse a bit in the wider moves? So let me see if I understand your question here, Eileen. Are you saying if it has a wider ATR, do I start to choke up and take profit a little bit earlier if the market's reversing? Okay, so here's what I can tell you on that. There's no easy answer. Here's the answer, Eileen. It really is, for me, at least me personally, it's determined by how heavy I am on the trade. So if I go into a trade with a lot firmer leverage, with a lot heavier leverage, yeah, as soon as it starts to come into some interesting areas of initial resistance, might not even be 40 pips of the ATR, but once we come into an area of initial resistance, yeah, I'll start to reduce the leverage size and bring my stop to break even, see if it flows. But on whole, you do want to try to stick to the discipline there. Eileen saying like those with 80 pips as a quarter of the daily ATR. Yeah, on a trade like that, Eileen, typically, you know, I don't want to throw out numbers that are arbitrary, and that's the one thing I want to be very specific of, okay? And let me take one step back even to add to that, Eileen. Just because the market has a 40 pip quarterly ATR doesn't mean that that necessarily has to be where we book profits. If you get into a position with a proper risk to reward ratio, and let's say the entry wasn't ideal, okay, and there's a resistance barrier coming up 30 pips out when the quarterly ATR is 40, y'all still have to react to that, right? Nothing supersedes basic support and resistance. A quarter of the daily ATR, guys, is just a guide, just an indication of what your expectations should be per trade. Price action, support, and resistance will always supersede any of those readings, any of them, because those are arbitrary in relation to where price is. Not what price is doing, but where price is. So Eileen says that makes sense. All right, cool. I want to make sure we're on the same page there. You just want to make sure, I mean, I'm very dynamic with this, with the use of leverage. if it's typically a really good support zone or resistance zone that I'm trading against of, typically I'll go in extremely heavy, way more heavier than you'd think, with a tight stop. And then as soon as the market starts to move in my direction, as soon as we come at some interesting highs and lows, yeah, if I'm in heavier on the trade, I won't wait for the 40 pip ATR. I'll start to chip a little bit off as we go. But on average, typically, if you have your proper entry and you have your levels mapped out, you kind of want to let the market do what it's going to do. Eileen says, I still struggle with waiting for profits more than losses. Yeah, that's a common mistake, Eileen. You'll get there. You'll get there. Best thing you do, like I said, set your limits, set your stops, walk away. Take a walk. If you're going to sit there and monitor the trade on tick-by-tick basis, I can see, yourself finding yourself a little bit more emotional on it. And if I wait to for closer to the quarter of daily ATR and the wider ones, I lose profits. So if you're finding that being the case, Eileen, typically you got to re-examine the entry. If you find yourself getting into a position and you keep getting stopped out ahead of the ATR, or it never reaches the ATR and ends up double backing on you, then we need to take a look either on the entries. Maybe the entry was a little late. And second of all, rework your levels. I mean, anytime that you're in a position, you should be automatically targeting the next resistance zone ahead of whatever the quarterly ATR is. If that's 40 pips out, great. If not, so be it. Graham says, my trading log shows when I move stops or take off before my initial plan, it costs me unless clear change in momentum indicators. Graham, I completely agree with you. Unless there's a fundamental change in price action, I've been on the same boat as you. Typically when I'm moving my stops out, I'm just giving myself a bigger loss. Typically when I'm moving my limits out, they don't trigger, right? Because the objectivity that you're using when you get into the trade is going to be your best guidance. Any decisions that you make after the fact that you're in the trade, 9 times out of 10 will be emotionally based. And that's our biggest enemy in trading, is emotion. So keep that. I hope that conversation helps you guys a little bit. Graham says, sorry to return to the earlier question when I asked about exporting trading view charts. I just meant for the charts you publish on SB web pages. Let me look into it, Graham. I'm not really sure. Can you just do one currency? I would think you have to export the whole layout with all of them. But I will look into it, Graham. Again, like I said, you're not the first person to request that, so we'll keep that in mind. Eileen, you're more than welcome. Graham, same to you, brother. Okay, great discussions. Any questions on the Aussie dollar from here? Looking pretty good. I think the short side's vulnerable while above 74.46. Look for a break of yesterday's U.S. session range high to get the bounce for a move higher near term in Aussie. All right. Going back to last night's update, we went over Euro Aus, we went over Aussie dollar. Last one was Euro Yen, another one that's been a decent play. Beautiful short last night. I mean, absolutely, we pretty much nailed it on this one. Here's what Euro Yen looks like now. Daily chart doesn't have too much for me to look at as far as interest, but intraday chart, absolutely key. And very, very clean, I might add. So here's what we looked like last night. We were coming right into the previous week's highs. Just above that, you have the 50 line, or the median line rather, for the current operative structure that we've been trading in for the Euro Yen off the lows. And momentum holding 70 resistance and a nice break to the downside, giving us a move well into basically what is essentially the weekly open. Okay, the actual weekly open comes in at 116.40. A 100% extension of the advance off the low came in right here at 116.41, and obviously you can see very clean pivots on this region. Support came right back into former support, now resistance, 117.23, and that's what we're holding right now. So moving forward, what do we do here with the Euro Yen? Nothing from here. From immediate price action where we are here, you're right slap in the middle of the weekly range. So I don't have anything to do here for me. As far as Euro Yen's concerned, what would I be interested in? Well, if we do get, whoops, don't want to do that. If we do get a Euro rally, and a failure again would be a really nice exhaustion point into that 764 retracement at 118, let's just call it 119, 118.99. That would sort of be a really nice spot where you'd expect to see a little bit more of a dramatic exhaustion, high spike, and sell-off. That would be one way to play this pair. The other way, an ideal way for me, in my humble opinion, would be if we get the breakdown for a long exposure into 115, sort of against the monthly open here. And that would keep us within the confines of this structure and would open up, I think, a larger rally here for the euro, not just based on what we're seeing in the euro dollar, but also based on the expectation for further yen weakness. And while the yen is rallying today, I don't think that's going to be a long-lived move there. I think that might be a very short-lived move, actually. So the game plan for the euro yen, or at least on radar right now, would be either for a move into the extreme near 118.98 for an exhaustion, look for short triggers up here, or if we get the dip first, ideally, long triggers down into 115.38, 115.40 here. So I want to just highlight one thing, guys. On its face value, this is an hourly chart, by the way. On its face value, this is simply a weekly opening range. That's it, okay? And we have continued to hold the weekly opening range into Thursday. So we'll see if we can't get some play here in euro yen. Again, sitting mid-range here for the week. No plays from this immediate level, but certainly looking for a move into the extremes. Broader upside bias remains intact while above uptrend support at 115.38. Questions on euro yen? Okay, some more comments heading the wires from Draghi saying ECB is ready, willing, and able to act if needed. Repeats that the ECB is ready, willing, and they're going to continue to push that across the headlines. I see that coming across various different wires at this point. Draghi says the focus should be on raising productivity, says structural reforms must be stepped up. We've heard that multiple times, yada, yada. Essential that bank lending channel functions well, says other policy areas must help support the recovery. And one of the things we've continued to hear, or the issues that we've continued to see, is that this bank lending is not filtering its way into the economy, right? Even the funding lending that we're seeing over in Europe, still not really fueling that lending to the real economy, with banks having a whole lot of cash on their balance sheet. Draghi says early survey shows no major Brexit impact on inflation. That's a big one too. Okay, so to concern some of the, or to quell some of the concerns with regards to the Brexit impact. Problem for banks is weak profitability, not solvency. And euro area banks in better shape on solvency than before. All right, I'll continue to give you guys headlines as they come through, but pretty much the same old rhetoric. We'll do what it takes, yada, yada, yada. Okay. Moving right along, we covered euro, euro Aussie, euro yen, Aussie dollar. Kiwi's up next. Tested that support barrier that we tweeted out last night on the back of the New Zealand Economic Assessment Report. It's a new report from New Zealand. Bear with me 1 second, guys. Okay, so just some comments on the Kiwi dollar. The support barrier, by the way, that we highlighted last night on Twitter was right here. Okay, this was basically the support barrier at 69.69. What's 69.69? Well, it's very, very simple. It's simply the post-Brexit low. You also have a lower median line parallel for the current operative function function structure that we've been in. Guys, it's been pretty clean for the Kiwi, actually. As much as I like to hate on the daily chart, the near term has been pretty clean for us for the last couple of weeks. You can see the downside break of this ascending median line formation that we were in for a few weeks previously. We broke it. We checked it as resistance, continued to move lower. On that break, we tagged on this pitchfork, which again gave us a downside bias below that median line. Today, or last night, again, heading right into that lower median line confluence with the low post-Brexit at 69.70. And that's still the low that you want to keep in mind here for a Kiwi. Not really too excited about getting on the short side from these levels. Again, remember, on the daily chart, we've actually made quite a big move in just a few days. Here's 1, 2, 3, 4, 5, 6. Today would be the 7th consecutive day of losses. Let's take a quick look at New Zealand and see when the last time we saw 7 consecutive days of losses. Here's the daily chart. You can bring up an indicator called consecutive bars indicator. And for some reason, it is all jacked up. All right, well, didn't see that one coming, but bear with me 1 second. We're at 7 days, 2, 3, 4, 5, let's say 6. When's the last time we saw a 6-day loss consecutively in price? Was right here, okay? So what happened from that level? We saw a 1-day recovery, a bounce from about 65.20 into 65.80, good 50 pips before making a low just a few days later. So my point being is you're coming into structural support. You are seeing momentum coming into support, and you're on a 7-day stretch to the downside. So for me, with the lows that you made there post-Brexit, look for a little bit of a bounce, look for a little bit of a pause on the downside. The broader trade remains bearish below this region. That's basically 70.58. We highlighted that here yesterday. So as long as you stay below there, the focus is still lower, but near term, I do think that momentum is waning, and you want to be cautious about trying to stay short or get into any fresh shorts from here. To play the long, you're probably asking yourself, well, could we play the rebound from here? It could. I would actually prefer to play, if you guys look at this nice little pivot here, if you got one last exhaustion low stab, might be the best way to play this as far as a rebound is concerned. That being said, you're better off trading with the trend. I'd be looking for a rally either towards that initial 70.50 level or towards the 50 line preferably to get back on the short side here for Kiwi dollar. Some of the comments that came out last night that prompted this drop from the RBNZ are basics, that they're saying concerns over strength in the Kiwi. RBNZ likely that further policy easing will be required. Monetary policy will continue to be accommodative. Long-term inflation expectations are well anchored. One of the major things that the takeaway or the highlight, I guess I could just show it to you. One of the major highlights was this. Says decline in New Zealand's exchange rate is needed, more easing likely to return inflation to target. So both of these are a clear indication to markets that yes, the RBNZ is looking to do further easing. They are concerned about Kiwi strength, which is something that Wheeler has said over and over again. If we take a quick look at the overnight index swaps for New Zealand, you can see the expectations here have just rocketed. Okay, next month, markets are pricing in an 87.8% chance that we'll see the RBNZ cut interest rates further. Remember, they're at 2.25% as it stands. With indications heading into Q4, really basically an assurance that the markets are expecting further cuts. Okay, and that's what's being priced in here for the Kiwi now. That being said, I'd be mindful of this near-term support right at the post-Brexit lows. Questions on Kiwi dollar? Again, let's just take a look at, okay, and traders remain net long. So I wouldn't necessarily say that that's, bullish by any means, but certainly irrespective, price overseeds everything, and we're currently coming into near-term structural support. Okay, moving right along, Kiwi Yen was another one that I just wanted to talk about. We had highlighted that on the radar charts, excuse me, earlier. Here it was. We went over this yesterday briefly, how we came right off that 76, 72 region, took out those downside targets into the median line before seeing another rebound here. Kiwi Yen on the near term, reworked these levels last night, and just wanted to highlight where today's low came in. Okay, came in right in an exact 1618 extension off the high. That's 73.74. And you can imagine, obviously, with the Kiwi weakness that we've been seeing, fueled by the recent yen strength over the last day or so, you saw that really jackknife this thing pretty sternly into that key 1618 extension, seeing a nice little rebound now. So the only thing I wanted to highlight on this trade is that you're coming back into the weekly opening range low. We should be looking for immediate resistance right here. Okay. Aside from it being the weekly opening range low, we're testing as resistance right now. I also wanted to highlight that this is the initial July opening range high. Okay, it's highlighted for you right there, ROH. So there's the initial opening range high. We broke lower, or we moved lower. We set the opening range low near 71.25. We broke the highs, stretch into that extension that we had highlighted earlier last week. The move lower, breaking back below the monthly opening range high, now offering it as resistance again. So if this reversal, if this opening range reversal is legit, we should expect this to hold right here into U.S. trade. And that's basically what I'm looking for. If it breaks, and let me clean this up just a moment. We don't need this 50 anymore. And a quick adjustment to this retracement, to the new low. Bring up a 38.2. Okay, a wider range ATR, so I'll leave that on there for now. And some nice touches there too on that same slope. Resistance, support, false break, resistance. Okay, so these are the levels that you want to keep in focus. And keeping in mind that the monthly open comes in at 73.56. 618 key retracement of the entire advance comes in at 73.40. This is sort of the key region of support. You're looking for new shorts on Kiwi Yen from close to here now. So I would be looking, for near-term scalps. I'm kind of a little hesitant to get long the yen at these levels from what's been going on, because we already had a pretty decent rally. Remember, let me just show you relative performance here as it stands for just the yen. It's the biggest gainer on the session versus the dollar, but if you take the yen in and of itself, you can see right here, it's rallying against all its major counterparts. Biggest loser is actually the Kiwi dollar already. So yeah, you're basically playing the strongest trend of the session. Yeah, I'd be looking for shorts right off this mark against the European highs. And the European high comes in, what's the European high? 74.26. I'm sorry, 74.31 is the European range highs. And that's sort of what I want to be fighting against. What kind of trigger? Well, let's take a look. We might have missed it already. Again, guys, I try to highlight as much as I can throughout the session, but we're definitely going to miss them at times. Kiwi Yen, using that JPY. Oh, I don't think I have it on this subscription. Wait one sec. Yeah, I mean, that would have been the trigger right there, Eileen. Not only is it just necessarily that trigger, but the fact that you see momentum here ever since the peak. So this is divergence on the 5-minute, right? Price action making a higher high, the oscillator making a lower high. But the fact that after that lower high and peak we made in European trade, momentum has held 60 resistance like a rock, you're essentially already on the lookout for short triggers. I wouldn't worry about this miss right now that we're moving, again, because we haven't opened the U.S. session yet, so you're likely to see some back and forth before it actually makes a move. But yeah, I'd be looking for a move lower here. For Kiwi Yen. Keep in mind one thing, Eileen, on the way down, if you do take the short, if we do move into the U.S., keep in mind this support region at 73, 74 into the monthly open. That's still a big, big zone for me. Not to mention that you have basic slope support here with a two-touch, parallel just lower. So it's kind of getting crammed here against the lows, but yeah, the focus still remains lower for Kiwi Yen. And a good combination, one of the strongest trends of the day, right? A place to take some off. Okay, got it, says Eileen. Right on. Right on. All right, so that is Kiwi Yen off support. Let's just take a quick look at the sterling crosses. We're running a little late on time here, but I do want to just give you a quick update on that. Sterling CAD, another one that's been on the radar for me and Jamie. We've continued to track this one. As we said yesterday, guys, there's nothing wrong with trading this range as such. And it's been the same setup that we've continued to follow since earlier in the week. Sterling CAD. Here we are. Okay, it's the same consolidation function. Buy near support, sell near resistance until you see the inevitable downside break or upside break is what's preferred. Keeping in mind that this is a pound cross, so you'll get a lot of these throwovers and pullbacks, false break scenarios. For us to play a breakout play, remember, on a trade like this, just like we did with Euro Aus earlier in the week, with a trade like this, what you want to do is see the consolidation break, check the support, and hold. That's the breakout play for a consolidation or triangle wedge pattern formation. So on Sterling CAD, same deal. Okay, same deal. Even if this breakout, you got faked out on it and you thought it was the legit move, as soon as we brought back below the trend line, that's your sort of tell that this thing is not really going to make the material break. So we're continuing to look at this. Remember, these tend to break 20 to 30% ahead of the apex. So look for that breakout in the next coming days or so. But long story short, I think this is going to eventually be resolved to the upside. Near-term support and bullish invalidation, still the weekly open right here at 70.63. Bull flag on pound CAD. It could be. What time frame are you talking out there, Eileen? I'm not sure if I would subscribe it as necessary a bull flag. I can see what you're looking at. You might be looking at something like this. I don't think that there's much justification for the support on the flag support or channel support of that move. I think it's more likely that you're seeing this into a consolidation wedge pattern or a triangle formation. And by the way, like we said yesterday, a measured move of that breakout would give you a target way up here. Now I have a big resistance level ahead of that near 76.20, but just to give you an indication of the potential here. And a downside break, obviously, your risk can move down to 161 even. So it could be a bull flag. Either way, the implications are the same. Eileen, the pendant you drew. Yeah, it could be. But again, you don't have a secondary reference point for this trend line right here, right? Even if you draw it from here, you could argue. But the implications are the same. We're looking for a topside break. That's what's favored. Typically, these triangle formations, a lot of the time, are continuation formations. So I think we're looking at the same thing either way. Again, near-term resistance. Still need to close above that July close high. The other trade was pound yen. That's another one that we've been following over as well. I think that was highlighted on the same day. Nope. Pound yen was on the 19th. Okay, here's what pound yen looks like now. So sometimes all you need is the lines and the slope, and that's it. Okay, just to put things in perspective here for pound yen and where we were earlier in the week, right? There it was. Key near-term support and near-term bullish invalidation was 137, 137.63 into 92. Didn't quite get down there. Basic sliding parallel, caught that low. Topside breach of the near-term basic trendline resistance off last week's high. Turned just ahead of that median line, right ahead of that. On the way down, finding support along that same slope. Now, I do think you risk a larger breakdown here near term before it breaks higher, but nothing's changed on this. I'm going to go ahead and drop the bullish invalidation level down to here. This is the monthly open. This is the former channel resistance or the basic slope still extending off that high from the 7th of June, or July rather, excuse me, and coincides with basic former resistance here. And you're basically looking at a region to 37.28, let's call it. So still holding slope pretty darn well here on pound yen. And it's interesting because you're getting all this commentary coming out from various financial publications about the impact of Brexit. Obviously, you're seeing that Article 50 is not being invoked yet, and there is continued talk from Theresa May that they're not going to invoke Article 50, which is their basic legal resignation of the Eurozone, until everything is sort of penned in, let's call it, and that process is likely to take a while too. So you can see obviously stock markets and equity markets have been doing quite all right, guys. We've been on a tear on most of the equity indices. Risk is pretty well maintained here, although you're seeing yields continue to drop, suggesting that not everyone's on board with the risk on trade. But as far as the UK is concerned, I don't think anyone really expected for the pound crosses to find as much support as we have in the last couple of days. And that's all the more reason, I think, that this thing just hasn't continued to fall apart. Taking a quick look before we wrap things up on the commodity block, just want to talk really quick about gold. Coming into that near-term support structure that we've been following for weeks and weeks and weeks, 1308 into 1303. Key support zone, the low that we made so far today is 1310. So I think you got a little bit lower to go on this before you hit anything major as far as support's concerned. Basic trendline support off the low from June, the high that you made from May, a 38.2 retracement of the May advance, and former slope resistance, now support, all coincide right here in this region. So look for a little bit more of a dribble down in gold, but I think near term it's starting to look for an area of which from an intraday scalping standpoint, you want to start to look for some possible long triggers. You want to start look for some basing and some support heading into that 1303 former high from May trade. For a bounce, I'm not saying we're looking for continuation and break higher, but definitely for a rebound here, the short side starts to look vulnerable heading into that key region of support for the gold trade. Graham says the UK government is waiting to give notice for Article 50 as it's upsetting the French. Look, there's probably a whole host of geopolitical reasons of why. Graham, I'm 100% sure of that. I wouldn't deny it. But also the real implications of the trade deals that do need to be renegotiated is not a simple task, nor is it going to be a quick task. So, it was interesting seeing Theresa May stand there with Merkel yesterday And it's going to be interesting to see how this pans out. Graham, you're on the ground there. I mean, I would appreciate anything that you have for us as far as sort of sentiment of what you're seeing. But, the UK story, I think, is going to be an ongoing thing that's going to stick with us for some time. Eileen says, and those 70 pips on sterling late yesterday from Christian's comment, I think is what you mean. So just stay calm. As far as the British pound is concerned, Kirsten in UK. Yes, I see what you're saying. I don't necessarily like the pound near term anymore. I did like playing the long side on a break of this descending formation that we were looking at earlier in the week. But from here, I really don't have a clear-cut game plan. Let's clean this up a little bit. Don't need that anymore. Don't need that anymore. It's a 50 retracement of the entire decline we made. A 100% extension still opens up the possibility of 29.65. Just bear with me one moment. Okay. Interesting. I just want to tack this on and see how it looks, and it actually doesn't look all that bad. So if you take a new pitchfork, just off the high that you made in on the 12th, the subsequent low on the 13th, and subsequent high that we made on the 15th, it actually has been pretty decent. And I'll highlight just the 50 line, roughly catching support, roughly catching support. The 50 line on the top side, roughly catching resistance, and a decent pivot along the 50 line, or the median line rather. Does highlight a couple of things. The upper median line parallel at the 618 retracement, at the weekly high. So you got the opening range high, the 618, and the median line all stacked up at 133.21. You got the current 50 line, which caught the lows, coinciding with basic trendline support, and that comes in right around the 130 handle. So some key levels here. I know the range is huge, guys, but I mean, it's the pound. We just got to sort of map them out as we go. And near-term support, I would put it that Friday low at this point, just on account of 715 low. Okay, just on account of not only the pivot that we made there, but also the pivot that we made here yesterday, and it coincides today heading into the U.S. close with basic median line resistance, or support, excuse me, at this point. So sort of the levels I'd be looking at. A break below the 50 line, I think you risk another drop towards the 130 handle here. Broadly, I'm still looking to stay constructive well above 29.65, really above this region at this point. But even on a correctionary stance, if it's going to make two equal legs down, you would have to leave room towards 29.60. But long story short, guys, on a drop into that region, I would be looking to buy. On an exhaustion rally here towards the weekly opening range high, towards 133.21, I think that might be a near-term sell opportunity for sterling. But again, keep in mind right now, you're at the weekly open. We've done nothing. Despite all the hoopla and the rally and the drop, we're basically unchanged on the week. So, Eileen, I hope that gives you some clarity on the sterling. If you're going to trade a sterling pair, I still prefer sterling CAD or sterling yen, the ones that we went over earlier. I think they've just been cleaner. But if you feel compelled to trade sterling versus the U.S. dollar, those are the levels I'd keep in mind for now. Okay. Any questions about anything anything that we covered today? Keep in mind, you still have existing home sales coming out for the U.S. tomorrow, at 10 o'clock today. And that will pretty much wrap up the U.S. docket for this week. You do get market U.S. manufacturing PMI numbers tomorrow, but I don't think that's going to be a major market mover. Expecting a slight uptick. Look for those existing home sales later today to really wrap things up as far as the event risk for the week. Last but not least, a real quick look at crude. That's final on my list here. On the daily chart, we've obviously been eyeing that key support zone. Look, we've continued to dilly-dally around it. I think you're going to continue to see a little bit more sideways chop here before this is resolved. None of the levels have changed. Downside break, look for channel support. Look for this region of key support. That's the preferred move on a topside rally beyond the weekly opening range. Look for initial resistance at the channel resistance, but really the bearish, invalidation level still remains at the weekly open near 48.30. Are the crude charts oil priced with dollar, like gold dollar? I'm not sure what your question is there, Eileen. You're talking about the actual... so this is the CFD through FXCM. Yeah, I see. It's not a pair, no. So this is a CFD with FXCM. Typically, you'll see it written as WTI, which is I can't even remember the acronym. In any event, you're just right, crude oil. Texas oil, yeah. Texas West something, intermediate. But yeah, just write crude oil in FXCM's platform to actually get the CFD pair. Otherwise, if you're looking for the futures, it's going to be CL_1, which is going to be the front month contract on futures. So depending on where you're looking at or what feed you're looking at, those are going to be the codes. And a futures is not also a pair. No, it's priced in dollars, but it's not represented. The symbol for it is not represented in a pair, no. Make sense? Okay. All right, guys. We're going to wrap it up here. I want to thank everyone who attended. Again, we'll be back on board Monday morning for a free public webinar on Daily FX at 8:30 Eastern. And we'll pick things up right here on SB Tuesday, Wednesday, and Thursday mornings, also at 8:30 Eastern. As far as event is concerned, you're pretty light for the rest of the week, so just watch broader market sentiment here and keep an eye on that dollar. I think you push higher and this thing starts to cap out a little bit near term and catch everyone off surprise. So keep your eye on that yearly open, just a little bit higher from where we are near 12,131. Best of luck trading. Have a great weekend, everyone. I'll see you next week. Cheers.